Are you tired of analyzing and scalping the forex markets without seeing results? Well, you're lucky, because in this video I'll show you the best 5-minute scalping strategy in forex that can help turn your trading around. Okay, so the first thing we want to do is identify key levels. So can you spot them? There's the support and there's the resistance. These are key levels because every time the market has touched the resistance, the market went towards the downside, and vice versa. Every time the market has touched the support, it went towards the upside. Simple supply and demand. We could also extend the support just a tiny bit, and we can see that it was previously an area of resistance, went towards the downside, and then after we had the break of resistance, which becomes our new support level. Now, key levels are great and all, but without trends, they're pretty much useless. Because we want to combine everything, let's draw our first trend. I believe this trend seems pretty damn good. Every time the market have touched this area zone, it went towards the upside. We can see the same thing just over here. Now, what does this tell us? The market is currently on a squeeze pattern. After the squeeze, there's likely gonna be a push towards the upside because that's the overall direction at the moment. Now we need to add some technical indicators. These will be the moving averages. The ones I'm gonna use is 20 and 50 simple moving averages. So follow along, go to TradingView indicator section. Under technicals, you will find moving average and double click on it. Now in the settings tab, make sure to change the length from 9, which is the default length, to 20 for the first moving average and 50 for the second. So this is what it should look like on your charts. Mine is orange for 20 and blue for 50. The reason I have 20 and 50 because I expect a bounce in between the two levels. Somewhere over there, I'm expecting some sort of candlestick price action, maybe a bullish engulfing candlestick in this case because we're trending up. That gives me a good enough reason to enter off the bounce of moving averages, and we can then profit a lot of money. So let's take a look what happens with this trade. So it does shoot towards the upside very nicely, breaking past the previous area of resistance. A nice bullish engulfing candlestick, swallowing the red one, bouncing off the 20 and 50 moving averages, making a new high just over here. We can see it, it was passed nicely. This already is a great confirmation to go long, so we could have potentially entered the trade just over here and could have potentially aimed for, let's say, 4 pips, something like that. We always want our stop loss to be covering the 2 moving averages, which it is just over here at the moment. 1-to-1 risk reward, great little scalp trade. Quick in and out trade, close it off, done. Now we should be expecting some form of support because previous area resistance has now been broken towards the upside. It becomes support level just over here. We have the 2 moving averages. Could we look for entry long once again? Well, maybe. However, sometimes the market pulls back a little bit more and you need to be careful. So let's see what happens. And it does go towards the downside, and it would have probably stopped us out if we continue trading. However, this would only happen if you're not experienced, because we're currently only analyzing on the 5-minute time frame for Euro US dollar. An experienced trader will always utilize multiple time frames. So when we're scalping, we want to look for 1 minute, 5-minute and 15-minute time frames. So this is 15 minutes, which means he has more powerful price action, and all the technical indicators will definitely be respected a little bit more. What do we see? We recently broke past the 50 moving average and confirmed the trend towards the upside. We're currently having a pullback back down, where to the previous area of support, which was the 5-minute chart just over here, or the 2 moving averages, which is the 20 and 50. This is where we expect a pullback bounce towards the upside. So even though the 5-minute time frame has broken the 2 moving averages with this candlestick just over here, that doesn't matter because we know the 15-minute time frame moving averages are just over here where our previous support is. This is likely a good enough confirmation that bullish pressure is still here to stay, and we should see further bullish movement towards the upside. You can also have a look at the 1-minute time frame. It just recently broke past the 50 moving average level. This is ideal. And now if we just come back to the 5-minute time frame once again, as you can see, we can adjust our trend line. 1, 2, 3, 4 touches, right? Every single time the market as such went towards the upside. We have our 5-minute strong support level. We know the 15-minute moving averages are just around the corner, and we know that the 1-minute time frame has recently broke the 50 moving average. This is already a great trade towards the upside. We just need to wait for some sort of price action confirmation. Whether you enter on 1 minute or 5 minute, it doesn't really matter. So let's see. And there we go, it goes towards the upside nicely. If you cannot find an entry reason on the 5-minute time frame, let's say there was no bullish engulfing candlestick, that's why you utilize the 1 minute. So if we take a look at this nice bullish engulfing candlestick just off here, bouncing off the 20 and 50 moving averages. Nice little trade. We would have to have our stop loss a little bit lower just in case it starts dipping down once again to the previous supported level. So you always want to be covering that, and you should be aiming for 70 take profit as well. So 1-to-1 risk reward in this case. And if the market is steeply going towards the upside, you can obviously maximize your pip gain by using the 9 moving average. And this pink line over here is my 9 moving average. And if we just drag this along, as you can see, you could have potentially made 17.4 pips profit, depending where you close. The rule of thumb is you close off when the 9 moving average actually crosses back down. So if it's trending up and it actually crosses the 9 moving average, you can close it off, but nobody's stopping you to close it off earlier, especially in this case from 1-to-1 risk reward to now 2.5 risk reward as well. But just out of curiosity, let's see what happens. So it does dip down, and if you close it off on this candlestick closure just over here, it would have been 13.3 pips, so 1.9 risk reward. So from 1-to-1 risk reward to 1.9, which is pretty damn good, nearly doubled your initial profit level. And this is why I like using the 9 moving average. So in case you don't like using moving averages for your risk management, maybe try looking at the higher time frame bias, let's say 15-minute time frame, where the market is likely heading. Well, this previous area zone has been heavily respected multiple times. We can see it just over here, previous area support, previously broken, pulled back, previous area resistance. Where's the market currently heading? Well, a nice move towards the upside. After such big push towards the upside, it has to retest the moving averages. This was an area zone that was previously respected. This could be a great resistance zone over here. So maybe this is where you should be aiming to close off. This 17 pips move, you could have easily closed with the 9 moving average or without it. You would have seen where to aim for, and this is why it's so important to know the simple basics of support and resistance. So let me show you a quick live trading example. This is Euro USD 15-minute time frame. We're currently developing a bearish engulfing candlestick. This is where we want to be aiming for. The 5-minute time frame is attempting to break this previous area of moving averages. As you can see, 20 and 50 bearish engulfing candlestick is forming. We have a strong area of resistance just off here, nice little trend down, so we know likely there's going to be bearish pressure coming forward. And now this is the 1-minute time frame, a great M pattern formation coming down towards the downside. We need to actually place this trade. Let me stop talking. 3 lot size, let's go. I'm not putting any stop loss whatsoever. This is a great short position. I'm obviously rushing it a little bit because it's live, so I need to be a little bit careful. Let's say we can aim for 10-10, 1-to-1 risk reward in this case. This is a great little entry, and on the 15-minute time frame, this is where we're aiming for, right? This was previous low. We should be going towards the downside very, very soon because we had that M pattern formation. Everything is trending down. I do believe that Euro US dollar will do well. And as you can see, it's dropping down nicely. Let's take a look at our mare trade, $102. Let me close it off. I would love to sit here and ride the wave, but I need to go. My wife's forcing me to go to a baby shower, so what can you do? 6 pips, as you can see. Perfect trade. Use this trading strategy and see how it goes. The last thing I want to mention is emotions. Don't be emotional when trading. Have a trading plan. Super important. Make sure you stay disciplined. Take breaks when needed, because sometimes over-analysis gives you paralysis and then you don't understand which is which, what is what, where to buy and where to sell. And if you enjoyed this video, make sure to leave a like, leave a comment, and watch this video next because it's pretty damn good and probably you will like it.